Hi Saravanan.
Hi, good morning, Marg.
Last 1 or 2 days, continuous calls from investors
Yeah,
with respect to this amendment that has come in the finance bill
correct.
on the impact of short-term tax on short-term funds.
Yes,
So I thought it is appropriate that we have a discussion
very
so
true.
that we will give a clarity to the customers on how to go about it in future.
Okay.
So what actually has the
Yeah, I'll tell you. Currently, what is happening is if I invest in a debt mutual fund
yeah,
and in a growth option,
correct.
and if I redeem after 3 years,
Ah,
it becomes a long-term capital gain for me.
correct.
See, as per the current guidelines,
Yeah.
if you invest in a debt mutual funds and hold it for more than 3 years, it is a long-term capital gain.
Yeah,
The taxation is with indexation, 20% is the tax.
right,
Let us assume, for argument's sake, the return from the investment is 6%.
right,
And assume that inflation, currently we are seeing around 6% inflation.
correct.
So let us assume 6% is the inflation, average inflation for next 3 years.
Ah,
So return is 6%.
virtually nothing.
Actually, if you index the cost,
Yes,
capital gain is nil.
nil.
So the tax is zero.
Yes,
So entire 6% is tax free in your hands.
that was a fantastic thing for the investors.
Yes.
Yes.
But now the amendment says if a fund has exposure to equity less than 35%, 35% or less than 35%. In this case, a debt fund will not have
100%.
exposure to.
It's 100% actually.
Yeah, no exposure to equity.
Yes.
So these type of funds will be categorized as short-term capital gain irrespective of the holding period.
Ah,
So now in a debt fund, if I hold it for more than 3 years also, it will be a normal capital gain, normal short-term capital gain,
right.
which means it will be added to my normal income,
Right.
which will be taxed at my marginal rate of taxation.
Okay.
So suppose I am at 30% taxation, 6% minus 30% tax. So the tax advantage has been removed.
completely removed. So which
Removed.
means short term, long term is gone.
Is gone.
For once, it's only in equity now. You
Yes.
don't have it in debt funds.
Yes.
So what will be the impact of this going forward?
See, one, if you look at short term and long term, short term, the window is there till 31st of March.
Somebody can invest if they
Yes.
want to lock
Next
for
to
a
1
long
week.
term.
Yes.
Yes.
So the indexation benefit we can get if you invest before 31st of March.
Correct.
So this window is the next 5 days.
Yes.
If we have money, we can allocate.
Right.
And not only that, and we have discussed a lot about the interest rate view.
Right.
That we are our view is we are close to the interest rate hike cycle.
Yes.
So from here on, probably 25-50 basis point hike. Then probably we are going to come down.
Yeah.
So in this cycle, actually we should invest in debt funds.
So you are talking about investor who is coming now with a 3 year
Yes.
outlook, investment for 3 year,
Correct.
and the interest rate cycle at the peak,
Yeah.
probably fag end of the rising interest rate cycle.
Correct.
So it's an appropriate time to enter into
Correct.
debt fund.
Yes.
But unfortunately, they are losing this indexation benefit.
Yeah. If you invest before 31st, we are getting this
precisely.
advantage.
Suppose if you are coming in before 31st March, somebody
Yes.
can lock their money, a 3 year money or 4 year money, you get an advantage now.
Correct.
The moment you take it to 1st April onwards, you
Yeah.
lose this indexation benefit.
Indexation benefit
So,
is lost.
which means virtually there is no difference between fixed deposits and the short-term funds or,
Yeah, or
debt
a
funds.
debt fund. Yeah.
Debt funds.
There is no.
virtually.
But there will be a difference in the sense in a fixed deposit, your yields are locked over a period of time, say 2 years or 3
correct,
years.
Correct.
But here we can play the duration call.
Correct.
Like today we are sitting at an interest rate, almost interest rates are going in the peak. So 2 years down the line, when the interest rate comes down,
Right.
we can get higher returns because of capital appreciation in debt mutual funds which are running a higher duration products.
Right.
So that option is there. So we cannot straight away. There is also still an advantage in mutual funds because of the duration play.
So you are saying that one can play the credit risk, one can play the duration risk.
Yes.
Arbitrage is not there.
Not there. Yes.
That's the only
tax
thing.
arbitrage is not
Absolutely.
there. Yes.
Right. So now, how about bonds from now on? Will this become an opportunity for investors to go direct bonds?
Yeah, definitely. They can look at direct bonds now. Today, the problem is, minimum threshold for bond funds is around 10 lakhs.
Yes.
See, that is a
one.
challenge.
Yes.
So it's very tough for a retail investors to look at the bonds at this point of time.
Right.
Maybe over a period of time, if the threshold comes down, probably it will be easy. But for an investor who is looking at 10 lakhs plus kind of an investments, now bonds also starts looking attractive. And we can take the interest rate risk and give them the right product. and we can give a good appreciation to them. Say along with the interest income, there will also be capital gain for the investors. So that's an option we can play.
Fantastic. So from come 1st April,
Yeah.
now low risk assets is fixed deposits, credit risk, duration risk,
Yes.
no tax arbitrage. So for those who want to earn little more than that, probably direct bonds.
Yes.
Any other option you are thinking about now?
I think
Because-
BAF will become very critical for investors going forward.
Balanced advantage.
Balanced advantage funds.
Right. There you have the 35% opportunity.
Yes.
You can still invest 35% in equity and get that indexation benefit.
Benefit is available.
Yeah.
So
it
usually
becomes
what
an
happens,
equity.
what they do, that 1/3 will be in equity,
Yeah.
1/3 will be in arbitrage,
Yes.
and 1/3 in debt.
Yes.
So you get that income tax benefit. That is basically it will be categorized as an equity fund.
Right.
Since it is more than 65% exposure to equity. So long-term capital gain after if you hold it for more than 1 year, it is taxed at 10% because it's become a long-term capital gain.
So you can also have a balanced advantage fund
Yeah.
with less than 35% equity or around 40% equity.
Yeah, around, yeah. Typically
So
they
it will
have
not come under equity category, but they will get indexation benefit.
Yeah, no, it will be an equity fund only. Balanced advantage fund to invest partly into arbitrage, which is actually exposure to equity
Right.
without any directional calls.
Right. Right.
But we'll have, as you said, 35 to 40% will be in directional calls in equity. So
right.
equity exposure will earn 35 to 40. Partly into arbitrage to categorize as an equity fund, they invest in arbitrage.
I am looking at a scenario where
Yeah.
can there be a balanced advantage fund which is structured in such a way that equity and arbitrage put together is 35 or 40%,
Yeah.
so that you come into this, you are escaping from this new law amendment,
No, but what happens
but you
is,
get that indexation benefit.
yeah, indexation benefit will be available,
Ah.
but it will be categorized as a debt fund
Debt
only.
fund only.
Yeah, so that is a debt fund only, but for that, if you calculate an arbitrage between a balance fund and a debt fund with 35% exposure to equity, this looks attractive because it is categorized as long-term capital gain and
Yes.
equity fund.
Yes.
So more than 1 year, it is only 10%.
Yes. I
So
agree.
this looks attractive for a longer term investor. And one more point which I would like to add is today index is at around 17,000 levels.
Yes.
So downside from this level is not that much.
Like what we say, equity, interest rate is peaking on the one side, so
Yes.
debt is attractive.
Yes.
Markets are coming at to the bottom.
Valuations
Somewhere
are
valuation.
attractive.
So perfect place for kind of a balance advantage.
Correct. For a long term perspective, somebody who is looking at 2 to 3 years investments with a good post tax returns, BAF will be a good investment product.
So finally, to summarize, for those who are finding it that this arbitrage is lost because of this new amendment, the options available are: one, they can get into balanced advantage fund, or they can get into direct bonds. Right?
Correct.
Perfect. Thanks a lot.
Yeah.